Good afternoon, ladies and gentlemen. This is Deb Strong at Financial Brokerage. I'd like to welcome everybody on this call today on behalf of myself and Keith Candido, the other sales manager here at Financial Brokerage. Just wanted to thank everybody for jumping on today. We have the pleasure of having Dustin Carlson on from F&G, and we're going to be talking about a new product with them in a moment, but I'd like to cover just a couple housekeeping items first. And that is, we have a couple new trips for our incentive program this year. One of them is to Hilton Head, which is 35,000 shares, which equates to about $875,000 of paid annuity premium for the year. And then the other trip is to Prague, which is 70,000 shares, which equates to 1.750 of annuity premium, which both of those qualifications are really easy to obtain. So we hope to see as many people there as possible. Also wanted to take just a moment to talk about an agent referral program that we have that I like to refer to as an agent's deferred comp program, where if you refer an agent to us at Financial Brokerage and they write any line of our product, life, annuity, long-term care, DI, and so on, you can get a bonus off their business for the next 10 years. So be sure and ask Keith and I about that. When you sign up, you do it electronically and you don't have to keep track of it. We do that for you. Also just wanted to take this time to introduce Dustin Carlson, our presenter from F&G. And Dustin, without further ado, I'll turn it over to you.
All right, thanks, Deb. Thank you for having me on today, everybody. Thanks for spending time away from your practice to be here. You know, we don't take that lightly here at F&G. We know that if you're not out there selling, you're not making any money and helping clients. So thanks again for being on. Let's get this started by rolling out an agenda, brief as it is here. So we have, why F&G, why now? We've been in the industry for a number of years, but I think the story is better than ever. Secondly, we have lots of advisor perks that nobody else really has in the industry. And then lastly, we're going to cover a brand new product released in October called the Power Accumulator 7 and 10. It's a different spin on accumulation than you've ever seen before, so want to definitely get into that product as well. So why F&G and why now? In 2018, we haven't got our final numbers in for 19 yet, but in 2018, we were a $3 billion sales company, which is a pretty big number. Puts us at rank number 4 in the IMO channel overall in the entire industry. So extremely excited about that. And last year, I can tell you we were definitely over $3 billion again. It was an amazing year. Took in a lot of premium from other carriers that really chopped their rates middle of the summer, this fall, and all that stuff. So really enjoyed a number of new agents coming on board. Secondly, we are a strong company. In years past, we were B++. That was due to some of our ownership and having us up for sale. In 2017, we were bought by 2 individual investors with a lot of pedigree from Blackstone, the world's largest alternative asset manager, who many of you may be familiar with. But nonetheless, those 2 private investors took us public. Now they own 20% of our shares. We also have 20% of our shares owned by Blackstone themselves. So we're extremely lucky to have that. I don't see any reason, and neither does the CEO of the company, why we won't get an A just as soon as AM Best will give it to us. And the third bullet point there is strategic. Not only are we strategic with that Blackstone relationship, sourcing our assets from them, having them do our investments, that just goes to the bottom line for F&G, because we're not having to pay a middleman anymore to do our investing for us. And what we're doing is we're pouring that back into our own internal rate of return, back into our strong participation rates for your clients, and into commissions as well for you agents on the phone. The other point I'll make on strategic is a number of our products we have on the shelves were developed by, ideas from agents that we have in the field or IMOs that we work with. And we're very, very proud of that history because, without that constant innovation, we would be a pretty stagnant company. And I think into 2020 and into 2021, you're going to see some incredible innovation from us. A couple new products, some innovation from an income rider standpoint. We're going to possibly release trail commissions come April, May, or June, somewhere in there. So a lot of great things on the horizon for us on top of what we've already accomplished this year. Getting into the perks, Power Producer Program, many people that have been in this program for years still sometimes forget they have it or how it works. I'm going to give you kind of a high level here, but you can always reach out to Deb and Keith for an overview. But really, it's a way for us to provide you a deferred comp plan. And, one of my lines is essentially, you help people with their retirement plans every single day, but really, who's looking out for yours? It's pretty much you yourself, right? I mean, there's no 401k matching that you have access to or a traditional pension plan as an independent advisor. So this is one way for you to supplement your income by producing with F&G. So here's a high-level overview. This is a non-qualified deferred compensation account. We give you credits based upon production in a calendar year. It's a 6-year vesting period, and those credits are earned by doing $1.75 million of fixed indexed annuity premium. Typically, those credits are worth $3,000 to $5,000. In this example, we have $3,750. There's a $4,000 mark in there. So when looking at this example, this is an agent that is writing $1.75 million a year for 6 years, the bare minimum to qualify. So let's take a look at years 1, 2, and 3. In year 1, this advisor did the 1.75, got themselves a deposit of $3,750. Next year, they do 1.75 million, get themselves an additional 3.75 million for that production. But as you can see there's a second deposit for $3,750. What that is really how this program has so much power. It is a persistency credit. So as long as the business that you had produced to earn that 1.75 million or the $3,750 in year 1, as long as that stays on the books in year 2, we're going to give you credit for that again in year 2. Same thing again in year 3, 4, 5, 6. As long as you're producing and staying in the program at 1.75 minimum each year, we're going to continue to give you that same credit in subsequent years. So at the end of a 6-year period, this advisor doing the bare minimum has $80,000 in their account. This is a copy of a calculator that Deb and Keith have access to. It's an Excel spreadsheet where if you put in the premium dollars that you think you can do in a year with us, and we add in the credit value of, let's say, $4,000, and then hypothetical account interest rate, that spits out an output there on the bottom of what that sort of production can do for you over a certain time period. So in this example, this is an advisor doing $3.5 million of fixed index annuity with us. Hypothetical account interest rate is 5%, and what that is the custodian for this account is Principal Financial Group, and they have set up an account where you have roughly 20 ETFs to maximize an earned interest rate. So 5% in my example here, $4,000 credit value. Let's fast forward to year 6. You've been doing that same amount of premium for 6 years. You've earned accumulated contributions of $168,000, or hypothetically, you're fully vested with that interest at $182,721. Fast forward to year 10, you get that compounding effect of all that previous business. You have a hypothetical account value of over $500,000. So not an extremely high bogey there at $3.5 million can take you pretty far with this program. Our 2020 Power Producer Conference, this is our annual trip. Not a lot of people have deferred comp, nor do other carriers have trips like this. This is $3.5 million to qualify. Now, this qualifying period just recently ended at the end of 2019. We haven't set the destination yet for 2020's production, so I'm still using this slide. But next year, based upon 2020 production, we'll take you to another Four Seasons resort. This is a great trip that we do. Not only is it a fun experience, but there's also a decent amount of learning there. And I can't tell you how many advisors, I can count at least 5 that have come back after that trip and told me, I learned a ton from all these other advisors doing business just a little bit different than me, and it's taken my business to another level. So hopefully we can get some of you qualified for our 2021 trip. So this could be an introduction or reintroduction to F&G. So if you haven't written us in the past, or it's been a little while, you may see some new product names in there, maybe some existing ones that you've written before. But what I'd tell you is we really have something for everybody. I consider us a Swiss Army knife of carriers. We have great accumulation, tops in the industry. We have excellent performance-driven income or stacking income with our Retirement Pro, Performance Pro, and my favorite product, the Accelerator Plus. And we also have the best guaranteed income in the business in our Safe Income Plus product that has a 7% bonus along with a 7% daily compounding 7% roll-up. So what I tell you there is give Deb and the team there a shot at all 3 of those categories of business with F&G. But today we're going to focus on the Power Accumulator 7 and 10. This product is first of its kind in the sense that we have partnered with BlackRock and their iShare platform. We believe in their ETFs and the historical performance that they provide, the household name that BlackRock gives us. So just really proud of this partnership. I think 3 things that you need to keep in mind throughout this presentation would be that it's a very innovative product. BlackRock doesn't just partner with anybody, and it's first of its kind in using ETFs, but it's very simple in the same breath. There's no caps or fees involved. And then lastly, it's very transparent. A lot of indexes, including some of our own indexes, have only been around for 3 or 4 years. So not a lot of traceable history there, but if you look at these ETFs that we're going to show in a minute, those ETFs have been around at minimum for 14 years, maximum 19. So you can pull up the ticker symbol, look at the history, show that to your client and say, Mr. and Mrs. Client, this is exactly the performance that you would have received if you were in this product. Just a little bit on the name and why we chose to partner with them. And the disclosure I'll give here is these numbers are as of March 31st of last year, so almost 10 months old. These numbers have quickly evolved. $7 trillion of assets. They're the world's largest global asset manager. It's an incredible number of assets. The bottom right quadrant is specific to their iShare platform, which has over $2 trillion now of AUM. They've been around since 1997 with the iShare platform, and I forget the number of employees they said they had dedicated to that when they first started, but it was less than 100, and now you can see it's over 13,000, let alone their insurance platform has 270 plus employees dedicated to it. The overview here with the Power Accumulator 7 and 10, make this pretty quick, but you can see a preview here of some of the sales material we have. We've made it very easy to poke and prod through this product, not only from an agent standpoint, but also a consumer brochure standpoint. I think it's as simplistic of a flyer that I've seen out there. So definitely get with financial brokerage, get some of this in your hands. You can place an order for it on our website, whatever you need to help you get comfortable with the product. But when we talk about this product, it's a fixed index annuity at its core. It has the principal protection, the tax deferral, the guarantees built into it, as well as added liquidity. But the advent of this product has been, if you look back right around 2000, I've been in the business since 2015. I'm sorry, since 2005, for roughly 15 years. The only index available pretty much was a monthly point-to-point with the S&P and an annual point-to-point. So there's good things about the S&P that everybody loves. It's trusted, it's transparent. You can really look at a history going back 50, 60 years, whatever that number is now. But it's also highly volatile. That's part of the reason that you've seen such a struggle by other insurance carriers to really price their product last year over the summer is, it's a highly volatile S&P 500 market out there. So when you're directly correlated with the market as the S&P is, that creates that volatility. Hence the advent of that yellow box there, the alternative index. We have a great index with Barclays, the Barclays Trailblazer Sectors 5. It's the top performing index in all the industry this year. Now then, we do have an index in the Power Accumulator that's actually performed a little bit better year to date, so I'll cover that. But the low volatility, it does have newer history, but it is managed by Barclays. This one will be managed by BlackRock, so it's true professional management. And then you have what we're going to talk about today, the advent of the ETF. It's trusted. It's transparent, it's time-tested, just like the S&P 500, but it also has flexible volatility in it, not the high volatility. So we can go in and out of certain ETFs with our Balanced Asset 10 index, which is proprietary to us, and I'll show you that in a moment and what I mean there. If you aren't familiar with the ETF industry, I'd encourage you to reach out to Deb. She is kind of an in-house expert. She knows a lot about it and has, in past experiences, much to say about it, and is extremely excited about the product. So reach out to her. I think Keith is up to date too. But what I'm trying to say with this slide in particular is, really, the advent of ETFs was a long time coming. You had mutual funds, which are very diversified. You had individual stocks, which are not diversified at all. However, stocks are tradable during the day, but mutual funds are not intraday tradable. So ETFs are the best of both worlds there. You have a large amount of diversification, but you're able to trade those every single day. I think one key thing that I did miss there is that top line. 1 in 3 investors in the United States owns an ETF, whether they know it or not. But what I tell you is, since 1 in 3 investors owns an ETF, and half of those are BlackRock iShares, BlackRock's going to be a household name for most prospects and customers that you have out there. So why the F&G Power Accumulator? You can see there, it's a simple accumulation story. There's no caps to explain in this product. There's no fee associated with it. It's very trackable and transparent with that history that we have up to 19 years old, as well as those real returns that we can talk about with the different ticker symbols. So getting into the details, we have it on a 7- and 10-year chassis, available in most every state in the union. There's 4 ETFs, individual ETFs, that you can bounce in and out of. You also have our Balanced Asset 10 proprietary index in there too, with an added ETF of 20-year treasuries. We do have transparency through daily tracking tools with BlackRock. You can type in the ticker symbol if you really want, which are listed here next to the iShare name. For example, the S&P iShare would be IVV, Igloo Victor Victor. Type that into Bloomberg or CNBC, your favorite app, and really track that thing down for the last 19 years. So as you can see, a lot of these live dates are from the year 2000, 2001, 2002. The youngest one here is actually gold. And believe it or not, there was a couple days there last week where gold spiked. So you can really build yourself a robust portfolio here. You have your domestic with the S&P 500. You have your EFA, which is your international exposure. You also have a real estate ETF and gold. But where most of our premiums going currently is the Balanced Asset 10 Index. It's essentially a 60-40 blend, 60% in the S&P 500 ETF and 40% in 20-year Treasuries. So you're really getting that alpha with the 10% volatility control in the S&P, but you're also getting the downside protection with 20-year bonds. Here's a look at the options here. I'm not sure why that graph isn't showing up on the slide. I apologize. It should. Oh, there it is. Nope, that's the EFA. Sorry, everyone. I'm not sure why that graph isn't showing up on this slide. But the 10-year average return on the ETF here is 7.79, and that dates back 15 years, or should have, if you could have seen the graph. If you look at the EFA, hasn't done as well necessarily. I mean, it's had some great years, but it's also had some down years. So that's a 3.73 over the last 10-year average. Then you also have our real estate index, done pretty well, 7.79 in that iShare. And then lastly, gold, hanging there tough at 4.84% over a 10-year average. Now, I wanted to cover the Balanced Asset 10 in depth because this is where we're seeing most of the money go right now. I'll show you why here in just a moment. But what it is, again, it's 40% of the TLT, the 20-plus year Treasury bond ETF, and then you also have 60% exposure to the S&P or the IVV ETF. It's rebalanced on a monthly basis. The volatility is managed at 10%. So in contrast to another index we have a 5% volatility control in our Barclays. A little less alpha in there, a little bit less of a way to capture that upside versus a 10%, which allows for more volatility. So keep that in mind when choosing your indexes out there. Here's a look at the Balanced Asset 10 average. It's averaged 10.61% over the last 10 years. It's pretty nice performance. This graph goes all the way back 15 years. I wish it would have went back to the tech bubble. This would have looked a lot better, but on average, the 15-year return is 8.09% inside of the Balanced Asset 10. You will see the live date of August 1st, 2019. So this index went live or effective on August 1st of of last year. So you may have a question on that. And what I would say is, yeah, it's been around for 3 months, 3+ months, 4+ months. But the two ETFs that make up this index have been around for 17 and 19 years respectively. So complete transparency there that you could show your customer if they so asked for that. Here's a look at the participation rates. So this is, in my opinion, why we see most of the money going in the Balanced Asset 10. With the current rate environment, we just come out of an inverted yield curve through the summer there, and the 10-year Treasury is still below 2%, and that's how a lot of us carriers, basically every carrier, prices their product as to what that 10-year Treasury has done. So what I'd say is that has direct effect on the 4 top ETFs that you see there. In the S&P 500, we have a 27% par with no spread. The 5.9 spread is applied to the 2-year index. that has a 54% participation. So you can see the illustrated rate there at 4.54. EVA isn't doing too well with those spreads applied. A bright spot would be the real estate index at 5%. Gold, gold will be gold, right? It's 2.46. So when you look at the bottom there, balanced asset 10, we've exceeded expectations as to the amount of premium that is coming into this product. Upper management couldn't be happier, which makes us happy because this product is resonating out there in the marketplace. You give your client a 60-40 blend of S&P and 20-year treasuries, you're going to have a solid, predictable type return. The illustrated rate right now in the 1 year is 5.48%. You do the 2 year at 100% participation with a 5% spread. According to the illustration, that's going to net out at 7.83%. What I tell you there is the year-to-date performance, and this has been over 20%. It's like 20.83, I believe. So, and that's real back-tested, real numbers, real trackable numbers. So it's over 20%. You apply 100% participation minus a 5% spread over a 2-year period, that would net the client at 15% gain. That's really good inside of an FIA. So keep some of that in mind when you look at this product. I think a lot of advisors are going to balanced asset 10. You can put half the money in the 1 year, half the money in the 2 years, diversify that out a little bit if you'd like. But for more strategies, you can reach out to the financial brokerage team there. Here's a look at our 7-year. Really nothing different other than the balanced asset 10 par rate. I guess the iShare S&P 500 goes from 27 in the 10 down to 25. So just a couple basis points there, but not too much change from the 10 to the 7. So when we rolled out the product, we wanted to make sure that we did it right. There's all sorts of co-branded consumer brochures, ways to get you comfortable with the product. We have a landing page actually where you don't need an access code or a password or a username, anything like that to get into. It's free for the public to see, where we talk about the index crediting rate strategies, the ETFs themselves, a little bit about BlackRock, just anything that you can need there. There's a link even to the brochures and the agent piece. They also have an introductory video, I believe is less than 2 minutes, but really gets the idea across about what BlackRock is doing and what we're doing with this product. And just for being contracted with Fidelity and Guarantee, you get a lot of access to BlackRock and all the tools that they have available for retirement planning. It really takes it to a whole nother level when you get into that side of the business, the security side of the business, and the idea that they make some of those tools available to insurance-only advisors is amazing. So take a look at some of the material on that landing page, and they can get you access to all the different software packages that BlackRock has. And lastly, it's on Retire Up. Not sure how many people on the phone are using Retire Up, but Retire Up is a great tool to be able to come up with the retirement plan for the client prior to the meeting. But if you're in the meeting with the client and you run into a roadblock, you need to shift some assets, or they tell you about an account that you had no clue even existed, which I'm sure it happens a lot to everyone here on the phone, but you can quickly add that premium into the retirement plan, or subtract it out, or shift it from AUM to fixed index annuity, or vice versa. Just a very versatile piece of software with Retire Up. So really encourage all of you to check out that landing page. But if there are any questions, I can take them now. But just keep in mind the 3 things we talked about in the beginning. It's an innovative product with a household name, pretty simple to explain, with no caps or fees. And then lastly, what most of those clients are looking for is, what has this thing done in the past? What has this product done in the past? And how can it help me possibly in the future? So with that, Deb, I will pass it back to you because I know we're limited on time here.
Thank you, Dustin. I'd just like to close with a few comments. Number one, I was so tickled when I heard that BlackRock partnered with F&G. F&G is one of our favorite partners to partner with for business, for annuities, and the fact that BlackRock partnered with them is absolutely huge. I personally have been a BlackRock fan for 20 years. I've owned them in my own variable annuity many years back. So I'm just so happy about this story because they manage, being the world's largest money manager, they manage over $7 trillion of assets. So if you have clients that perhaps have BlackRock in other investments such as variable annuities or mutual funds or things of that nature, they're used to paying a fee. And the beautiful part about having BlackRock partner with F&G and having this in our Power Accumulator 7 and 10 is that this is an indexed annuity. So you have the beauty of having downside protection, upside potential, and no fees. So that's absolutely huge. Another thing I'd like to point out is over the last year, I've personally seen a shift from income riders to pure accumulation, and this is definitely an accumulation vehicle. So please be sure and call Keith and I. We'd be happy to help you with cases. It's a great story. And Dustin, I'd like to thank you for hosting the call today. As always, you did a fabulous job, and we look forward to having you guys call us, and Keith and I will be happy to help you. So Dustin, thank you very much, and I want to thank everybody on the call today.
Yeah, thanks, Deb. Appreciate it.
You bet. Thank you, folks. Bye-bye.